Today, I want to show you guys how I got into this trade I'm currently in. Just to give you an idea of the exact time we entered the trade, we're looking at a trade that took place on Thursday, and currently I'm up 121%. So just a brief overview of how I got into this trade, what some of the things were that I looked at, and how you can get into trades similar to this. So as we've looked at in previous sessions, that in order to enter a trade, we're looking at one main thing, our point of interest. Okay, so for this particular trade, in looking at my point of interest, I considered my supply zone as well as my trend line. So if we simply just have a look at what I mean by that, first things first, we can see that on a 4-hour, we're on an uptrend. Secondly, if I have the trend line tool and I draw it from the low, we can see that price is respected this level over here, here, as well as here. And if we have a resistance line going up, we can see that price is respected this level once, twice, and the third time. Okay. Of course, the trade we entered is about in this location. So we're going to zoom in to see exactly why that was the profitable place to enter this trade. Okay. So we have our point of interest potentially when price pushes up to this resistance trend line. Secondly, we also looked at establishing where our areas of supply was. We can see it that there's a daily supply zone up here. And what's a supply zone? Well, a supply zone almost acts like a resistance. It's a point or an area where price approaches, you are likely to get a rejection. Okay, so we can see here that price goes towards this supply zone, this daily supply zone, as well as the same region as our trend line. All right, so this is a very key confluent area that we could potentially be looking for a short trade here. So after I did that, what I did then is I entered my 15-minute time frame. So I've zoomed in. This is my execution time frame to see what's happening as price approaches that level. So we can do that together. If we have the replay tool, we can see here that as price approaches that level, okay, if we look at market cipher, what we expect to see is some sort of bearish divergence. What is a bearish divergence? Well, a bearish divergence is a pattern that prints when price is going up. As price is going up, the momentum is going down, creating some sort of divergence. So here we have it. As price goes up and up and up, we can see here that our momentum waves are starting to print lows. So here we go. You can see our first low printed by the momentum. And we can see that clearly using our trend line. As price goes up, momentum goes down. Bear with. Let's go back. As price goes up, momentum goes down. Okay. So this is my initial, first sign that price may have some sort of reaction here. There may be a bounce. Of course, price could continue to go up. We don't know exactly what it's going to do, but we've built our probability, we've built our edge, and we can see that this would be a good area for price to have some sort of reversal. All right. So as soon as we've seen this bearish divergence, what am I looking out for now? I'm looking out for a potential change in market structure. Now, there's no point in me entering this trade without a change in market structure. And what's a change in market structure? Well, that's when we're going from printing higher highs and high lows to lower highs and lower lows. So we must first see a change in market structure before any sort of price action changes direction. All right. So in order to do that, we continue playing to see what price did. The price went up, and we can see that it rejects off the 6-minute supply zone. All right, that was drawn previously. But if we zoom in, if we come out of our replay tool, let's see exactly what happened and how I was able to enter this trade. So if we go to our 6-minute time frame, we look at our 6-minute structure. In our 6-minute structure, what can we see here? Well, we can see here in our 6-minute structure that we're printing higher highs and higher lows. Okay, so if we go, we've got our high low, high, low, high, low. We've got a high. We've got breaking structure. Yep, no breaking structure as of yet. We've got a high over there. And our initial breaking structure, it doesn't happen here. Doesn't happen here. Well, I would say it happens at about here. So that's our breaking structure on the 6 minutes. And what do we expect after a breaking structure? We expect a pullback and a potential continuation. And that's exactly what we got here. We got a pullback and a continuation. All right. So where would I enter this trade? Where would my trade entry be? Well, I've seen the bearish divergence on the 12-minute. That said to me, okay, well, we could potentially be looking at a short here, but we need our confirmations. We need to see that there is a change in market structure. Now, after I've seen that change in market structure, there's been a break in market structure on the 5-minute. What I do then is I pull out my fib tool. I go from the high, the last high, to the low, and I stretch that out. And I can see that I can potentially enter this trade. Usually I like to go for, the golden ratio or potentially the 786 because I think, that's a premium level and that's where we are most likely to get, a reaction from. The 38% level, it's not as reliable, especially for Bitcoin. But in this case, that's exactly where we got the bounce from. So we got the bounce from this region here, which is the 38% level. And we can see that would have been the position to enter our short there. Okay. So what we would have done in that scenario is place a limit order there, driven it all the way down, for our trade. And where would our stop loss be? Would our stop loss be over here? Will it be here or will it be all the way up here? Well, the safest place to put your stop loss is behind the last low. So if that's the last low, we want to give it just a tiny bit of room and put it up there. Okay. So if we drag this trade down, we can see that this would have been a profitable trade, and this was the trade I entered. Okay. All right. Now, some of you might be saying, well, that's quite a huge stop loss. That's a massive, range of area for which price can, bounce back to. And that's absolutely correct. So how could we have entered this trade in a more clinical way? Well, if that's your concern, what I would have done then is I would have gone to the lower time frame, let's say the 1 minute, and I would have looked, to see what was happening on the 1 minute structure. Where did that break in structure take place on the 1 minute? And that would give me a more clinical entry for my trade. So bear with me one moment. Let me just get to that part of our chart. Okay, so we can see here on the 1 minute time frame, if we trace our higher highs and higher lows, we can see exactly what price is doing. So if we go over here, and on the 1 minute time frame, we can see that we've got higher highs, higher lows, coming all the way up to our point of interest. Remember, we've already marked out this point of interest using the daily supply zone, as well as the trend line at the top of our bull flag. We can see that we have our first break in structure around about here. Okay. And as soon as that break happens, what do we expect? We expect a momentary pullback, which we get, and a continuation. Okay. So our break in structure took place exactly here. I'll just draw that in so you can see. This would be our break in structure here. And we can call that boss, a break in structure. And we can see that we had a slight pullback. We didn't quite go into the premium zone. We got a slight pullback, and then we got a follow through. Okay. If we were to draw out our fib tool just to confirm exactly where that happened, again, it's happened at a 38, percent level, which isn't always the case for Bitcoin, but for this particular trade, that's exactly what happened. So I would have entered a trade at exactly there with a limit order. And this would have been a short trade. And with that, you can play that all the way down, until until you see a change in market structure in the other direction. That would be your first indication to exit that trade. Okay, so here you can see that we have a better risk to reward ratio, and our stop loss can be a lot tighter than what it was earlier. Okay, so that's exactly how I enter that trade. Just to summarize what we looked at, the first thing was to establish what's our point of interest, what's our POI, and the point of interest was derived using our supply zone and our trend line. Now, once we established that point of interest, I was looking at, okay, what's price doing as it approaches that area? What are the candlesticks? What patterns are printing as we approach the area? Is there a change in market structure? Is there a bearish divergence? And can I get involved for reconfirmation at a fib level? Okay, and that's exactly what we got. So this is quite a nice move. I'm currently up 121%, and we're waiting to see exactly what price does next. Looking into next week, what we're looking at is we're still marking out those zones. That daily supply still hasn't been mitigated. It hasn't been broken. So we're looking to see what price does as it approaches that level. Of course, we got a bounce, as we spoke about last week. We got a bounce from the golden pocket and a naked point of control of the entire range. And we're looking to see exactly what price does as it approaches this level. So what I've done is I've set my alerts. So as soon as price pegs those levels, an alert will go up on my phone, and I can come at the chart and have a look and see whether my confirmations are in play. So that's exactly how I got into that trade. I hope that's been helpful to you, and if it has, leave a comment, leave a like, and I'll see you next time.